Are ETF issuers starting to dip into the shrinking supply on exchanges? We dive into the data to analyze just how ETFs are impacting supply and what that could mean for Bitcoin's future price. Plus, we dive further into the terrifying macroeconomic environment we find ourselves in, with China's stock market collapse looking grim. Could we be looking at the beginning of the great financial crisis on steroids? Also, centralized crypto tokens like Solana continue to show their weakness. TikTok, next block. Let's get into the show. Welcome to the Tuesday, February 6th edition of the Bitcoin ETF Daily Show. I'm Dante Cook, head of Swan Business. In the show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel to help us extend our reach and break through the noise here on YouTube. Let's jump right into our flows. Cumulative spot Bitcoin ETF volume has surpassed $30 billion. These ETF issuers are happier than Andy Reid talking about the best burger joints at a Super Bowl press conference.
Top 3 cheeseburgers.
Oh my goodness. We can go across the street, get an In-N-Out burger. Tommy's, Los Angeles. Yeah, we'll throw Hawkins in there.
Where's Five Guys?
Five Guys is up there.
Grayscale was back on top as the volume leader, seeing 241 million compared to BlackRock with 163 million and Fidelity with 114 million. BlackRock and Fidelity continued to lead the race with 137 million and 38 million in inflows respectively yesterday, outpacing GBTC selling, which continues to drop day over day. Overall, on the day, we saw net inflows of $68.1 million. Well, why are there zeros on this chart? Well, that shows us overall that volume continues to be down across these ETF issuers over the past week or so, but it shows us that there wasn't enough volume from these other ETF issuers to generate additional Bitcoin units that they had to report on. On to our interesting facts. There's some evidence that the new ETFs are starting to impact supply on Bitcoin exchanges. According to CryptoQuant, there was about 2.1 million Bitcoin on exchanges the day that the ETFs were launched. That remained relatively stable till about 2 weeks ago, and now the remaining Bitcoin on exchanges sits right at about 2 million Bitcoin. Bitcoin inflow to the ETFs this week has been 16,067 Bitcoin, which is in the ballpark of the 20,000 Bitcoin difference we've seen in exchange balances. At a net demand of roughly 5,000 to 10,000 Bitcoin per day, price will have to respond to this relentless buying pressure. But enough with the institutions. Let's not sleep on retail, where we're seeing a healthy amount of Bitcoin accumulation. According to Glassnode, users with less than 1 Bitcoin are accumulating about 700 Bitcoin per day over the past 14 days. Right now, 900 new Bitcoin are mined every day, and after the halving, that number will go down to 450. Overall, supply continues to dwindle. In larger ETF market news beyond just the Bitcoin ETFs, Vanguard has overtaken BlackRock for the total assets under management leader across all ETFs, with about 30% of overall market share. Now we can see why BlackRock has been so eager to get into the Bitcoin ETF game. They've been losing market share to the ETF king Vanguard for a number of years now. We'll see if they're able to reverse this trend. And it's obvious now, even though Vanguard, with a terrible take on its Bitcoin position, continues to grow in market share. So why would they enter the race? ETF investors overall are choosing corporate bonds over United States treasuries. And with a record of 8.9 trillion of government debt set to mature in the next year, someone will need to buy the 10 trillion in US government bonds in 2024. But who will that buyer be? In other news, let's look into the larger macroeconomic climate and the terrifying environment we find ourselves in. Let's start internationally. We told you we would keep an eye on the China collapse. According to Kyle Bass, China's economy looks like the U.S. financial crisis on steroids.
Evergrande and Country Garden together have $500 billion worth of debt. 2 companies have $500 billion. Every single property developer in China that's public or listed is in default, bankruptcy today. When the Chinese miracle, and I put the miracle in quotes, when the Chinese miracle was running its course, it was all real estate focused. Let's say all. The substantial majority of Chinese GDP growth was real estate and the concentric circles that surround real estate. And now you're having a reversal after an unregulated and unabated climb in real estate. Now you're seeing a real estate collapse. So this is just like the US financial crisis on steroids. They have 3.5 times more banking leverage than we did going into the crisis. And they've only been at this banking thing for a couple of decades, Brian. China is going to get much worse, no matter how much their regulators say we're going to protect individuals from malicious short selling. Imagine regulators blaming a 15-year swoon on their stock market on short sellers. It's just, it's hilarious.
The U.S. economy is in a much better place than China, but it's not looking rosy. First off, the average interest rate on U.S. credit card balances is up to 21.5%, the highest rate that we've ever seen since we started collecting data in 1994. Secondly, full-time employment has plunged by nearly 1.4 million people over the last 3 months. And finally, the 10-year Treasury yield minus the 3-month Treasury yield makes for the most restrictive U.S. monetary policy since the 1970s and 80s. But with that dose of gloom, let's always take a moment in our episodes to zoom out and find the optimism and hope that Bitcoin brings us. Bitcoin is continuing to grow in the energy securing the network, reaching a new all-time high of 560 exahashes per second. We're roughly 74 days away from the Bitcoin halving, where the supply being issued daily will be cut in half. We're in an era of great monetary inflation, and our governments are addicted to money printing. A great investor shouldn't concern himself with what the best investment will be in 2 years' time, but 10 years' time and 100 years' time. Paul Tudor Jones, arguably one of the greatest investors in Wall Street history, thinks that over the next decade, Bitcoin will be the fastest horse in this race. As we mentioned earlier in the show, that 5,000 to 10,000 Bitcoin per day is being eaten up by Bitcoin exchanges, the price will have to respond to this relentless buying pressure. You know what else is relentless? Amazon. If you type in relentless.com into your browser, it takes you to Amazon's website. When the market is uncertain, I go back and read Amazon's 2000 shareholder letter. This is how Bezos starts. Ouch. It's been a brutal year for many in the capital markets, and certainly for Amazon.com shareholders. As of this writing, our shares are down more than 80% from when I wrote you last year. Nevertheless, by almost any measure, Amazon.com, the company, is in a stronger position now than at any time in its past. So if the company is better positioned today than it was a year ago, then why is the stock price much lower than it was a year ago? As Benjamin Graham says, in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. And over the long term, Bitcoin is the heaviest machine, and it's getting heavier and heavier every single day. So with that, don't trust, verify. The co-founder of GitHub was banned from his own company. Not even the founders who have created the centralized systems can dodge the threats inherent in these centralized systems. With Bitcoin, you can't be banned from a system that doesn't control your wealth. You have the keys. Don't crypto, Bitcoin. And if you needed more evidence to stay away from crypto, Solana, one of the largest protocols out there, a Web3 DeFi blockchain giant, is having its 11th system outage since 2022. Bitcoin continues to operate flawlessly, producing a new block every 10 minutes. TikTok, next block. And we continue to build an alternative financial system. If you're interested in taking the next step in your Bitcoin journey and want to go all in, but you don't feel confident that you have the right expertise or advice or the know-how to buy large amounts, to self-custody, to do inheritance planning, to think about all of these things that we've discussed in these previous episodes, consider Swan Private. Swan Private is a one-on-one concierge service where we provide you with a real human Bitcoin expert who's available to you by text or call 24/7, 365. They'll walk with you on every step of the way in your Bitcoin journey, from your first purchase to inheritance planning. Sign up today at swan.com/private. And at the end of today's episode, watch the video of a testimonial of some of our Swan Private customers to learn just why they rave about this service. And with that, we're signing off for the day. This is Dante Cook with swan.com. Happy stacking.
as I take steps deeper into Bitcoin where maybe I'm doing things that feel like above my technical pay grade. The Swan team is always there to help me walk through that process.
Cash in this account over here isn't doing me any good. I'm not really preserving my wealth. I know that. I'm losing it over time. Swan's offering this way to be exposed to Bitcoin and maintain an account like that.
I wasn't having any luck onboarding my company onto an exchange. He said, well, you should try Swan. And so I did. And the rest is history.
Hi, I'm Greg Balmer.
My name is Todd Taylor.
My name is Laura Thiel, and I'm a Swan Private client.